Alright, got the audio working. Jesus Louises. Alright. This is the last 2 weeks of gold up in from April 30th to April 10th. Alright, I'm teaching this. This is a video for myself, a self-reflection video. But this is gonna be educational too. I'm not profitable, so go ahead and turn this video off if you want. Monthly low. Alright, so we swept this monthly low. I'm not even going to try to teach this in a style, actually. I'm just going to keep this shit real with me. Yo. So obviously we swept this monthly low, right? And we pulled into this weekly order block right here. See this order block? Sweeping this monthly low right here. In OTE. So there should be no questions that we have bullish sentiment now, yo. So then we come in here. Alright. We see we made this doji, right? The first day that we're starting off is right here. Alright, so we see that we've been bearish on the daily. Everything says bearish. The only thing that says bullish is that we're in OTE, in the order block, sweeping monthly lows, and we made this doji. Alright, so then you can kind of assume, you can use your head. Alright, are we in an area where it's likely to reverse, and then how is it expressing itself? The markets are constant expression, yo. So you can see right here, we got from here to here. Now clearly we closed over this high, which means that we are now bullish on the 4-hour. But then look, we closed under this low. So are we bearish now? Or should we close under this low? So are we bearish now? Yes, right there and then we are bearish. Yeah, but where are we headed to? We're headed to these down closed candles right here as order blocks. Alright. And so we're coming in here slash OTE. We're sweeping this low right here, which is in OTE. Does this low right here in particularly get swept? Heck yeah, it does. So it continue on its trend upwards. Alright, so we're starting from the 30th. Alright, so where's the 30th at in here? So we've already swept a weekly OTE, and now we've already swept a 4-hour OTE, and we're breaking highs. So there's no doubt that we are bullish right now. This is April 30th. Right here, 6 o'clock. But then you got to use context clues. Alright, so this high right here, we are bullish. Alright, let's go down to a 1-hour. Let's turn back on our ICT sessions 1 indicator, which just plots out the times. If you're a real trader, you don't need any real indicators. This one just shows me what time New York session is, what time London. If they got a bunch of indicators on their screen, they don't know what they're doing, yo. Because each one of these candlesticks and where it's at is an expression. All the indicators are just like text messages you're sending to trying to figure out like how she texting you. That's what an indicator is. You want to know what she's saying? Pull up on her, take her to the park, go up the hill or something. I don't know. But so we knew we were bullish going into this day. And then we have higher time frame draws and liquidity where the 4-hour is heading, probably to this high. Alright, so looky here, yo. We know we're bullish. We're bullish on the 4-hour. We bullish on the 1-hour as each one of these highs keeps on getting closed over. Boom, even so, yo. Really, this is simple math right here, yo. Somebody said I'm not good at math the other day on Instagram. I said, you're right, though, because I'm really not good at math, yo. Alright, April 30th. Gonna pull up over here. So now we know we're bullish. We basically just need a 5-minute market structure shift. We can see the 1-hour for the New York session opened up and swept this low, which means it swept an hour low for liquidity. So now if we get a 5-minute market structure shift off that, there's really, if you don't know what to do during this moment, you gotta be completely fried. So look. Sweep right here. We see the sweep, this is what I was saying. This was that hourly low right here. Switch it to the hourly low. I'm gonna try to do this fast. All right, hourly low, 1-hour low. Boom. So we got a sweep of an hourly low right there. We know that the higher time frame draw is these highs right here. So boom, 5-minute market structure shift. Alright, yeah, and then pull back to equilibrium. So where do we come back into equilibrium? Right. Technically, schmechnically, Do we get to equilibrium right here? Technically we did. So boom, right here we're good. That's all we need. So then let's go into the 1 minute. Alright, and then we didn't get a 1 minute market structure shift. We only got this almost an inverse. Then we came back down. Then we cleared the table right here. Then we came back down. Then we almost like kind of swept this, but we didn't. So regardless, we came back over here. We didn't get the 1 minute market structure shift until this candle right here. Man, buy it. This candle right here, this one right here, closed over this. Look, this is a up close and this is a down close, which means this is a swing high, and we closed right over that, which means we broke structure officially. Yo, so then we put the low right here for the stop loss under the original sweep of EQ. Then we take a 1-to-1 profit always, so we can go ahead and get the risk off the table. And if you don't want to take profits there, then just add in 2 more contracts and leave a runner for whatever. But always take off the risk, because now we know if we hit that 1-to-1 that we have no risk on the table. Now this shot straight to the target, which was this high right here. Now this high is right over the 600 levels. So really, I would just set my TP at the 600. But we can set it right at that high too if you don't want to be so calculated with it. Alright, boom, first trade, super easy. I mean, that was about as clean as it gets. Higher time frame draws, sweeps. I mean, you knew what the higher time frame was, and then what did it give you a setup for? Easy money. The only reason that you're not making money is because you literally keep on choosing to do stupid ass shit. You keep on choosing to go against the order flow of the higher time frame. You keep on choosing to risk everything and go broke, yo. You keep on choosing hell, literally. If you want to just sit and breathe right and be ready to execute, that's 374, and then that divided by what's 93 times 2? 186. 374 divided by 186. That's a 2-to-1. That's what it offered, alright? Don't be sitting here screaming, oh, I want a 3-to-1, I want a 5-to-1, I want a fucking... It offered a 2-to-1, and that's a 2-to-1 after taking a 1-to-1 partial. If you do 281 divided by 93, that's a 3-to-1 really, but since you took the partial off at a 1-to-1, it changed the risk to reward, so now this is a 2-to-1, 2.1-to-1. Alright, that's money still. Alright, so for the day, 374. We're going to keep it this simple too. I'm not going to journal everything. I'm keeping just the day, the move, and the execution. After that first move, we're going on to the next day now, because that's how we're going to be doing this shit in real life. We're not going to be sitting here. Alright, what's going on? Let's stay along. Let's overtrade, look for another move. If you make money as soon as you get on the charts, yo, and you don't lose any money, yo, just stop, yo. If you want to test your skills or you want to take another trade, take it with fake money, yo. You don't gotta use real money just to be like, oh well, let's see. Because what if you're wrong? Boom, you lost it. What if you're right? Cool, you've put more experience under your belt, but you didn't have to risk any money that you just made. So after that one trade, just be happy, yo. Now we have right here, we got this pullback into let's go ahead and clear the all the noise, yo. Hello, we still there? Hopefully this comes out clean. Alright. So 4-hour order block right here, bullish order block. They're down closed candles. You call them order blocks or just down closed candles. Yo, they're at the bottom of this range though. So what happens? Alright, we got a 4-hour range right here, and we got a pullback into an order block. That's how you know it's fixing to be one of those explosive moves, because we're going to get in right here on the 1 minute, and we're going to try to get out over here. If not, we could take that mother up here for real, yo. But alright, this is real simple, real easy shit, yo. We switch to the hourly. It's not complicated at all. If I'm not making $1 million goddamn dollars by the end of this fucking week, then I'm gonna be fucking crazy, yo. So we pull up this 4 hour. We got this series of down close, not these little weak ass down close. Look at these bigger ones. These ones holding more liquidity. Probably this one in particular because it has the biggest body. But we could just pull it from here. All right, boom. On top of that, order block that it swept, we have this fair value gap right here. So boom, it dipped into that. So, and everything was bullish on the 1 hour. We closed over these highs. We never closed under one of these swing lows. Do we close under any swing low? This one closed under the opening price. That's not a market structure shift, or maybe that's a market structure shift. That's not a breakage structure though. Yo. So then boom, we sweep liquidity. So we should know, bro, we're gonna take this up to the top range, yo. There shouldn't be anything complicated about this, yo. There should be nothing complicated. We know that we're taking a long coming into this day, yo. The fact that I'm struggling to pass a funded right now doesn't make any, it makes a lot of sense because you're gonna, traders find success out of failure, yo. You're not gonna find it anywhere else, yo. So boom, we get this huge displacement out of this range. Oh shoot. Don't be worried about looking for, are we taking a short? Because look, we haven't even took out Asia range yet. So yo, if we would have got in down here, that would have been cool. But okay, actually, know it. You can get in right here as the pullback to equilibrium and take it up to the Asia range. But if you're paying minute, close attention, yo, if that is even Hazam, yo, if you pull this right here, that's a breakage structure right here, yo. So then the range is from this candle wick up to this wick. Now, did we come back to equilibrium? Well, the next candle already opened up in equilibrium, which means if you're paying good attention, you could take a long from there. That's what I would be doing. I would be paying good attention, yo. I want to be on my phone, scrolling like now is not the time to change my life, yo. So then as soon as we get a close over that candle, which, yo, alright, this is the best entry right here. I'm going to just say that. Maybe, no, because the swing high is that this is a up and this is a down close. So this is the high that needs to be broken right here. So then we pull the stop loss down here. And then 372. Let's bring it exactly to where that is. Alright. So this first run, we would have got our take partials, and we never even came back up to what's it called? And then we hit add a level on here, and we target Asia range. Now Asia range is at 649, and if the institutions are targeting, the institution traders are not over here like, oh, let me put in 6.496. People on Wall Street are just like 6.4. They're like 650. Let's just slap it at 650. So that's where they're actually taking their orders off. It's the 50s, the 80s, the 20s, and the 100s, yo. So boom, we take that off right there, and then boom, isn't that magnificent, yo? Look how, look, and you're gonna sit here and freak out, yo. And I'm letting y'all know, I learned how to trade in the shelter, yo. I said I'm gonna move into a shelter, really, and I said I'm not gonna go get a fucking job or do anything to waste my time. I'm going to learn how to trade, and since I moved into a shelter and didn't give a fuck and stayed focusing on learning how to trade so I can make a difference, somehow ended up in an apartment that I still haven't paid any rent for. But this is what falling in line and believing in yourself and believing in God will do. Because now I got an apartment for the next 3 years at least, and it actually costs more money to keep me in the shelter than it does to have me in an apartment. So there's always going to be a finesse, yo. Doesn't make any sense. So 608 plus 186 equals 794. And I mean, it costs the government more money to keep people in a shelter than it does to have them in an apartment. That's why there's a crackhead in a nicer apartment than you, and you're over there busting your ass like a fucking goofy. So 794 divided by, what's 186 plus 186? I need another calculator. I don't like my phone. My phone's too heavy. 186 times 2, 372. So 8 divided by 372. This is a 2.1, but a 2.13 to 1 don't look so bad, do it? Nah, don't. If you took off the take partials and it was just one contract, 608 divided by 186 is a 3.2. But you gotta know that it's really not about the ratios. It's about taking off. Because what if we didn't believe it was gonna make it to the top of Asia range and we were scared we were gonna lose money? Well, since we got a take partials right here, we basically instantly go off and hit that. And then the rest of this, all this choppiness, we're not stressing. We're not like, fuck, man, when's it gonna hit? Like, we could slick walk out the room and go enjoy a nice day in the park, yo, at that point. And then look back at our phone while we're in the grocery store like, oh yeah. And everyone's like, what the fuck you oh yeah about? And I'm just like, God's good. Alright. Alright, and did we even lay down the news for this day? Alright, so let's do this a little bit more organized. This is like my third time back testing this, fourth time back testing, fifth time back, goddamn million time back testing this shit, boy. This shit fun though, I'm not even gonna lie to you, yo. It's more fun on camera too, because then you're just having more fun. And it's my first day sober again, so I'm glad. And when there's a difference between being sober and then trying not to smoke weed at night, because you're just like, fuck it, like, let me just get high, yo. But like, when you like really like just like don't have any weed, like you just get comfortable. Like, I'm not gonna lie, I only got like $10 more in my wallet right now too. So like, I could probably shake some shit. You know, I could probably, oh let me be desperate and hit up my sister for $30 for some weed. But like, I'm gonna just stay sober until at least my cash assistance comes in. But right now, all my money needs to be going into these markets, because at least into a fund it, really. At least into a fund it. Alright, so 2 to 1, 2.3 to 1. Now we're doing April 1st. Alright, I didn't make no jokes on April 1st, I'll tell you that. Alright, switch it to the 4. Gonna come over to April 1st. They should make it a double click to cancel orders. Alright. Next day, April 1st. April 1st. Alright, this is April 1st right here. We were still bullish. Everything's still bullish. But the thing about April 1st is everything was bullish. Till we pull up an equilibrium. Now we have a reason for this reverse right here in this dump. So if it seems bearish, it could be bearish because we're in a fair value gap right here on a higher time frame. We're running into these up close candles as well. I don't know if we actually swept this up closed. Regardless, we're in equilibrium, so we have likeliness to reverse. So let's go down into the 1 hour now. 1 hour power. And then So we're looking for longs on this day. That's all we should be looking for, because on the 4 hour we were bullish, on the 1 hour we were bullish. So really we should be looking at a long probably off of this down closed candle right here. If not, if we didn't get a long from here up here for a move. Alright, now let's just go down and look for a clean 5-minute market structure shift or breaker structure. So they do say. Alright, so if you were making any sense, we got a low right here. This is the real swing low though, because alright, that never came back to equilibrium. So shit. Fudge. I'm trying to figure out where's the clean move on here. There's really no clean move on here. Unless you want to use this is technically a 5-minute breaker structure and a pullback to equilibrium. That is fully technically that, yo. So I don't know what I did on this day, but and even right here is a 5-minute breaker structure and a pullback to equilibrium. See, swing high, swing low. So if you didn't enter right here and you don't enter right here and you wait for it to come back down here, you don't get a 5-minute market structure shift over breaker structure until right here. But then you need to pull back to equilibrium. And then the best pullback to equilibrium you get is I wouldn't do this range because this is one of those awkward ones. You got to be subjective. You know, you don't have to trade any of this action at all. But this is what I see is the breaker structure, and it's going to be a pullback to equilibrium, or it's going to be a pullback to equilibrium of this whole range. Because first it had to make this swing high, and then versus just breaking over this one and coming back into equilibrium. It made a swing high, broke it, and then came back down and swept the liquidity. So those are the two entries there. That's one of those subjective, messy days. You don't have to trade any of the nonsense. If you can sit there and just be like, I'm not dealing with any of this noise. But if it's the algorithm and it's saying something, man, don't act naive. Alright, so let's just say worst move we entered here, because this is the only part that seemed like it was somewhat clear. I had a pullback to equilibrium, and then let's say we bought right on the close. So that'd be like right here. Alright, and then boom, let's say that we're already so close to the 80s right here. That's why this is an awkward move. So after it sweeps the 80s, the next institutional level is the hundreds, which is going to be up here. So if we would have targeted the hundreds, what would have happened is we would have got this first profit right here, and then we would have lost the profit on the way down. Oh shoot. Let's get that at a 1-to-1. So we would have got that first profit. Now we could either move our stop loss up to break even and keep that, or we could just stay in the move, which I would just stay in the move. Comes down, stops us out. So we didn't really take a loss there. Yeah. And then if you really want the best entry, I would say if you didn't enter in the second worst entry, it would have been this one right here. Because this was an awkward, if we come back over to the 5-minute, trying to do the zippier, but so this is a breaker structure, and then this is a pullback to equilibrium. So if we would have entered on the 1-minute inverse here, you see what I'm saying? And then equilibrium right here. All right, so if you were goaded enough to realize that's what it was saying, uh, if not, as long as you traded with the higher directional time frame bias, you would have either got a break even move, which, all right, at least you tried, and you got break even, all right, whatever, and or you would have got this move, which as soon as you see a 1 minute market structure shift, which the 1 minute breaker structure is the close of this candle right here. Now, you take your first profits at the 1-to-1 which you're risking, so you can take your risk off the table. That's the most important part, is take your risk off the table as soon as you can. As soon as you take the risk off the table, you're literally just waiting for money to come in at that point. All right, and then the next institutional level is the 80s. So I would really want to just take this profit, like, to be real. Right there. But that is so crazy. That's so scrunched up. So let's say we would have took it any further. I mean, we could pull out a Fibonacci tool, I guess, and use some projections. But pull these projections from here to like here. I'm just kind of throwing these somewhere random. I'm trying to make too much sense out of nah, because that's about where the projections down here would say anyways. Up here at the most. So yeah, we would have just failed that first one, but yo, if we would have stayed in, we would have came over here. All right, pull back to equilibrium. All right, then a 1 minute market structure shift. So now we're over here, third attempt of the day or second attempt, depending on how you look at it, and or only attempt, depending on how you look at it. We've done came over here. We've done swept some lows. All right, we sweep equilibrium of the 5 minute range, and then we close over this high right here, which is making this a 5 minute breaker structure. So even if there were some bullshit moves, we stuck around and we waited for the good. All right, then take your first profit at a 1-to-1 from what you're risking. This is really easy, bro. All you have to be is here in him, man. You just gotta wake up. You can't wake up 30 minutes before the charts and make a breakfast and get your mind right. Yo, you gotta give yourself enough time to at least go on a walk outside and eat breakfast, or work out and eat breakfast, one or both or all. So I would say wake up an hour before you gotta be on the charts. If you gotta slide into the charts like 10 minutes before, as long as you get like a full 10 minutes analysis, that's chill. Now let's take profits at the next big figure. 820. 820 level. Do we make it to 820? We make it to 820. That's why these big figures are nice, because you know that there's no really data for us to the left to look at unless we go far over to the left. But it's like, alright. But yeah. Or we could take it off at the hundreds. But we're already taking off this over here that's basically the hundreds, which is the top of this range right here. And this range is so dynamic that it's whew, like this is a big stop loss. I'm not gonna lie, that's a fat stop loss. But yo, they worked out, and you just submit to the algorithm. You really don't trip or stress about it. You really don't gotta make any decisions when it comes down to it. The markets are gonna tell you, hey, do you want to enter here? And then you just do you want the money, or do you want the loss? And then all right, so let's go ahead and take this over here. 0.4, and then that divided by now this is a 1.6 to 1. Not the best ratio, but it's not bad. That's overall too. If we didn't do the partials, 481 divided by 213 is 2.2 to 1. So that's decent with the overall, but with the overall 1.6, I mean, hey, as long as we don't lose any money and we can take partials, that's great, yo. So Wednesday, and then now we're gonna go on to the next day. Now usually when I backtest, I document the daily, the weekly, the 4-hour sweeps, all of that. I've already done that like 6 times, or like 4 times for the last 2 weeks. Just over and over again. So this is just like simplified. Like I want to get the move in there. I want to get the entry, and I just want to have the news. So just the news and the actual move, and then I'm just doing the risk to reward, 1.6 to 1, and then the profits. So April 2nd is where we're headed now. Real simple. We've been big bullish. We've been big bullish on the daily. We know that we're still bullish on the daily because we swept the daily, and actually we swept the weekly OTE. Then we made the higher low on the daily, and then by now where we're at, which we're doing the 2nd. Alright, well, by the 31st, when this candle closed, we officially closed over this high, which means we know we're big bullish now. We know that the daily's bullish, we know that the 4 hour is bullish, and we know that the 1 hour is bullish. So we come over here to the 4 hour, and the thing is right here, though, we took out this high right here. Let me see which day. We're doing the 2nd now. Alright, so we actually do get a close under this low right here, which makes this technically bearish. Now listen, we pull up into a 4 hour OTE. So that means that, hey, we could potentially be bullish though, especially since we're in this down close candle right here. Alright, we could be potentially bullish, alright? But we closed under this low. We switch it to the 1 hour, so we're bearish on the 4 hour. Now we're bearish on the 1 hour as well, because all of these were even more seemingly bearish. And then so when we go into New York, it looks like New York sweeps and then goes up. It does pick up the bullish structure that I was talking about, that it's going to get from reflecting off of this series of down close. It's 4 hour down close, 4 hour orders blocks, whatever, and being in the 4 hour OTE, already sweeping past equilibrium of this range, now in a 62 to 79% retracement. So that's why, boom, it could have been a bullish day. We could have bought on the higher time frame right here and held up to here, but for the lower time frame, I mean, we're bearish on the 4, we're bearish on the 1, so then pay attention to where we're at when we pull up to the 5, yo. Because I could see myself being lost looking for longs because of just where we're at in the range. But yo, in London sweeping Asia right here. But yo, realistically, when we come into New York session, hold up, let me pull up the hourly. Realistically, 4 hours saying bearish, 1 hour saying bearish, and the first thing we do is we sweep the close or the open or whatever of the previous 1 hour candle. So listen to what the order flow is saying. Alright, boom, sweep on the 1 hour, go to the 5 minute. I think we're actually on the 2nd. Alright, so look, what do we get? A 5 minute break structure. And what do we look for when we get a 5-minute break of structure? A pullback to equilibrium. And then what do we look for when we get into the equilibrium of the range? A 1-minute market structure shift. That's it, a 1-minute break of structure to the downside. Now, you know, this first retreat to equilibrium was false because you could see that there's a fair value gap right here and there's two highs right here. So what it really means is not just a pullback to equilibrium, it's usually a pullback to sweep some form of liquidity in equilibrium. So you can see on the 1 minute that this is a distinct high in equilibrium. So off of this first pullback into equilibrium and then this 1 minute inverse right here, or this 1 minute break below this low, I wouldn't buy that because I know it needs to knock out this liquidity right there before. Same with the second move. Oh, is this the one? And then boom, no. Bro, let it get all the way into equilibrium and at least sweep a high or a fair value gap in equilibrium. And if there's not one, sometimes it will make a high. And then you're like, all right, let's take a short, but it usually is wrong. But then you're like, well, then it comes in, it sweeps that high that it's made so it can have an internal sweep of a high that's in equilibrium. As long as the high is going to sweep in equilibrium, even if it has to make it or if it makes the high on the way down. Either way, it doesn't matter. Yo, so up here, boom, as soon as we close under the low of this candle, it's really game time. Take profits right here, 1 to 1. Boom, now that is some baller shit right there, yo. But dude, I wouldn't hold it anywhere past, I would not target London. You know why I wouldn't target London? Because we swept a 4-hour OTE and we're already in a 4-hour down closed candle. So you know that we're likely to be bullish, even though the structure said that we were bearish. Yo, so after that, take your profits, because then boom, what does it do? Then it reverses and it goes, and we could set this at a big figure. So all we gotta do is 0.7 to 0.0, the 20 levels, the hundreds, the 20s, the 50s, and the 80s, yo. I don't know if I might just need to change my environment to get rich, because it'd be stressful living in here. But like, in the mornings is low key like chill, honestly. It should be chill enough every single morning. And yeah, I could move back in with my grandma and go to live with my dad and grandma, but I'll probably just end up getting in a fight about trying to help my dad stretch his toes or some shit. You know, I don't believe in stretching my toes. Well, fuck. Be like, I don't believe in yoga. Alright. Word. Divided by, so this is a 2.5 to 1. That's a good ratio. Almost 3 to 1. Yeah, boom, quick. Bing, bing. Boom. These are all 2 contracts, because that's 2 micros is what we're testing right now. Alright, let's go to the next day. You know, KFC wasn't started until this man was 66 years old is when he started KFC. Isn't that a crazy fact? Alright, so let's go into the next day, Zor. Next day was Lezel. Next is a Wazana. It's nice because my neighbors have a system, and when they play their system, it's far enough, but close enough. So that way, my other neighbors won't play any music right as outside my window, while my neighbors down the street a little bit are playing their music. Little vibes stay just right. So my neighbors, they be playing music, they be having that shit blasted, and they be having it facing the exact opposite way of everybody facing my motherfucking window sometimes. I'm just like, just turn the bitch around so y'all can at least listen to the fucking Y'all just sending the bitch right into my room sometimes. I'm like, this shit is retarded, yo. Let me watch my language, though. This algorithm do us justice. Alright, so April 3rd, keeping it pushing. Knot it up. 3rd, keeping it pushing. Keeping it pushing! Alright, nothing's really funny at all, actually. Oh, we're doing April 3rd. Actually, let's go ahead and tally up this week real quick. So, no, Friday, April 3rd. Alright, that's Friday, yes. So let's finish up this week. So, we know that we're big bullish. Did I just backtest the wrong day or something? I don't know if I just did the wrong day or what. Dude, did we just backtest the wrong day? We just did April 2nd, right? No, we're doing right. Alright, so April 3rd. Now, April 3rd, it's tricky because it is also, so let's remove everything. So this is OT of this range, right? Breaking structure downside, pull up bullish. But this is also OTE of this range. So when this sweeps this high right here, slash this fair value gap in equilibrium, you know that now we have sentiment that it could be going short right now. I don't know if it sweeps this fair value gap. I know it definitely sweeps this high though, and then it definitely nicks OTE. So let's put this fair value gap right here. Let's go to the 1 hour. Let's put our thing back on. So yeah, we did tap into the fair value gap. We're technically bullish though for the day, and we're technically bullish on the 4 hour too, but we're sweeping these highs right here, and then we're sweeping even the opening price on the hourly. So everything's bullish, but based off location, it could very well be bearish. And that's where you got to be subjective. You got to understand what she's saying. It's not just because everything closes over a high means that we're bullish, yo. We just close over highs on the 4, on the 1 for sure. And I'm trying to think. 1 hour up, 1 hour open. This is 1 hour close. No, this was the 1 hour open for a bearish candle. So then we just go into the 5 minute, see how it's reacting. You got this if you just stick to the rules, yo. I should really be like stacked up right now. Like I should be having like all the money, no problems for real. It's crazy. I'm just dealing with that. I guess at this point, it was a little bit technical, but now it's really just psychological. So boom, this was the morning. Oh yeah, now this is hard to read, but yo, I rarely go out. I went out and got like 2 beers on this Sunday, coming into this Monday. Hold up. So April 3rd, stay second. So was that, so April 3rd was a Friday. Yo, so April 3rd was a Friday though. So this right here was April 2nd, yo. And then April 3rd was a Friday, yo. Wait, what? April 2nd was a Thursday, yo. So Friday was a 3rd. So then we come over here, but we don't have a 3rd. Y'all see that? Am I tweaking? April 2nd. It just completely skips the 3rd of the month, yo. What the hell? Friday, April 3rd. Thursday, Sunday, Monday, April 6th. Where's Friday? Thursday, Sunday. Yo, how the fuck, do y'all see this shit? How the fuck is this even possible, yo? It's acting like Friday never existed, yo. Y'all see this shit, right? Like, I'm not tweaking, right? Thursday, April 2nd. I might have been talking all that shit. Yo, so I don't know why there's no Friday. Thursday, it's like, what? Wednesday, Thursday, and then just completely skips Friday. This doesn't make any sense at all, so we're just gonna go ahead and let it make sense. We're gonna skip to the next day. Monday, President Trump speaks. I think it was because that was Good Friday, but I don't know why it didn't show that over here still. Because I remember we did have some holiday that was on a Friday. Alright, so then we're gonna tally up before we do Monday though. This is what we were gonna do. Probably should have just skipped this part within the video, but see if I do that or if I just post this raw. Alright, so now we're gonna go back and we're gonna test how much we should have made just catching these first moves. Alright, so 374 plus 794 plus this one apparently. Alright. Hold up. 608 plus 186. That's the same one as this one though. Alright, 608 plus, alright, 794 divided by, alright, 186 times 2, 372, 794 divided by 372, 2.1. So 2.1 to 1. So start from the top again. So all we're doing is we're getting to know our worth right now. If you don't know how much you can make in a week, then you're going to be stressing. If you know that if you stick to your rules and you just execute, then you're going to come out on top. 374 plus 794 plus, how is this 794, yo? As if we made the same profit here and there. 374 right there, 794. Oh, I guess I put the shit up there somehow. I don't know, let's just delete that. 794, I don't know how the ratios are 0.2 off. Plus, shit, 694. Plus 371. That would have been for the week a smooth bag for real. Like that's really the whole funded damn near. In the first week you could have basically, bro. Actually, this last week I'm about to back test is about to be the week that I just had. But 2 weeks ago, in 1 week you could have already passed the funded damn near. Alright, now let's go on to Monday. I'm not taking a break, I'm not stopping, I'm not doing jack. Alright, Monday we were saying that we swept this 4-hour high right here, in this 4-hour OTE, in this 4-hour fair value gap. Everything is bullish, but if you interpret what is going on, yeah, we just swept all that liquidity. And then we had a 5-minute market structure shift, and then we had another one. So anywhere right here, if we get an inverse. Now I got here and I was like slick, like kind of hungover, and I could tell what the fuck was going on. And this is probably one of the most subjective trades that I took this week. So I see that we're in equilibrium right here. Looks like New York just gave us a one more open sweep before it carried on. Now you could have got this 5-minute breaker structure and got in on this sweep too, or you could have got in this 5-minute breaker structure and got in on this sweep. Regardless, if your stop loss was up here, you're good, because it ended up coming back up and nicking that. But I think for this one in particular though, I put my stop loss right over these highs because it was really over this one, but I'm like, we might as well just put it over this one. Either way, we would have got to my profits before the stop loss got hit. So we're doing a Monday. Okay, my bones popping. I need to work on my yoga. So yeah, I think it was as soon as we got this close right here, I was like, fuck it. And I was, man, I had 2 beers the night before, 2 big old glasses of beer, boy. I don't drink. That's the first time I drank this whole year. So my ass was feeling like shit the next day. I'm gonna tell you that. And then take this off at a big figure. Sheesh. So I mean, we could take off at the 20s. Or no, we can take off at the 700. We can take off at the 700s. Or no, 720. 720 would be better. I say 720 is better. Right? So we took it off at the 700s, we'd be here. Or the 680s. The 680s I say is better. But actually, fuck all the bullshit. Because we would have made it to the 680s eventually. As long as, look at that, how that stop loss almost got hit. But the only reason I don't try to exhaust it for the 680 is because from this London range right here, from this low up to this high, we got to take off at a low in equilibrium. And yo, look where that low is in equilibrium. The only low you see in equilibrium right here. That's where we take our profits at. Sometimes, and then we could round it to a big figure, but honestly, based off of this move, I only really round off the equilibrium or off the big figure if I feel like there could be a little bit more movement and I want a little bit more profit. But based off of that low being in equilibrium, that's actually all I could ever ask for, really. So don't get greedy. You got to know when to utilize the institutional levels or when to just do it on some like subjective. I'm gonna try to go to bed tonight, man, and then tomorrow is the day I wake up and I'm officially gonna be in the right headspace and everything. Even Friday I was on some bullshit, but tomorrow I am on some shit. Nah. That's all I gotta tell you. I'm sorry. I'm saying act like TJR. That's not even funny. Shut your dumbass up, boy. Motherfucking yo bitch, boy. And nothing had to do with TJR when I said that. I just think his style of his humor is just. It's like when you're like maybe you were like some like white kid in your house and you're learning how to day trade. You could watch TJR's videos and be like, ha ha ha. But like when you're like in the Bronx, like in a men's shelter, and you're trying to like really like change your life, and this dude is like on the screen talking about, but actually giving you game at the same time, it's kind of like dehumanizing to watch and learn from the dude. So I stopped learning from him. I'm not gonna lie, I couldn't keep on watching. Then I watched Justin Werlin's videos. His are way more cleaner. Apparently he's a scam. I bought his mentorship. Honestly, if you look like a pussy, you probably trade like a pussy too. So that's my fault for even buying Justin Werlin's shit. And then I watched all of ICT's shit, and I'm still watching some of his shit. And then I recently watched Path to Profitability. I watched that whole thing by TJR, and he's way more mature, and he has way more. And I accidentally watched the last episode first, which was the only piece of information I needed, which is a 5-minute pullback to equilibrium, and then a 1-minute break of structure or inverse. And then I watched the whole series. But yep. 3 times 2, 166. 362 divided by 166. So yeah, I really do think I am like the greatest trader that's about to step into the game, into the open space at least. Of a lot of traders are ducked off. They don't even give a fuck about any of the social media. There's people who are making $100 million every month, yo. I just don't believe we see them. You see trades by Sai. He is the only trader who I see posting his profits. My neighbors are bumping some shit. But yo, I feel like the way I'm coming though, like I'm really like gonna be like, yeah, I'm really gonna be him, because that's the only thing that makes sense, you know. I'm gonna be Himothy of all, you know what I'm saying? I'm just gonna be him for real, like I'm gonna really be him, and I'm gonna probably be him for you type shit. But Let's go into the next day. Next days is Allah. Next dailiano. I just backtested this like yesterday too again for like the second, third, fourth time. You know, when the time starts changing, and then they start scooting up the 1 minute information, and you're like, fuck. You just get the last 2 weeks in. And then you could probably load old CME data, but I don't know how to do that. I just go back test something else. Go back test like Euro USD or something if I've already back tested all the data available on gold. Or I'll back test the 4 hour moves, 1 hour moves only, like bro. So like anyways. So like after coming off of that imbalance, like we're still technically bullish, like when we come into this day right here. So that's what this day kind of had me befuddled, I'm not gonna lie. Because, yo, did we close under any lows besides this low we closed under? And then did we close over any highs? Well, we closed over this swing high, and then this is the down close. So this is this up close candle, this is a down close candle, which would technically make this the swing high. But since we did this little funky move right here, I don't know if we got to close over this now, or if closing over this is fine. This high is higher, but this high is one that actually has a swing high and then a down closed candle. So does that make this one more valid? So this is kind of a sketchy zone, but then we put in this lower high right here, yo. We still putting in higher highs, higher high lows on the wicks. So we're still pretty bullish, like I was saying. This is just a little tricky. So we switch over to the hour. Hold up. Alright, we closed bullish on the 1 hour though during London, so that should give pretty good sign. Now I know when we sweep London, it could make you think, or London sweeps Asia, it could make you think that we have short sentiment. And we actually did have short sentiment. See, we came and we took out Asia again. But it was just enough to, we were only taking out Asia for London, so New York could take out Asia for the real bullish sentiment. Sometimes we gotta be bearish to be bullish. You know what I'm saying? You gotta be down to get up. Feel me? But so let's say we were only taking longs. Alright. This sweep right here, this sweep of this Asia right here, this was the real move right there. So the first move we would have took, would have been right here, would have been this 5 minute breaker structure, pull back to equilibrium. And we either would have took on a loss, or we would have got a 1-to-1, or would have got break even. And then the second one we would have needed to have been ready for after that loss, and not getting discouraged, just trying to let the charts give us more information. Now this is the real displacement, 5 minute market structure shift, pull back to equilibrium. Now let's look over at this one real quick, just so we can see the loss. And are we on the right day? Damn, what are my neighbors like? Who the fuck is playing the goddamn music, yo? Like, turn that shit up, turn that shit out, leave it at the fucking level, yo, or mix the shit. Somebody get on the decks for real, blend the music together. Like, what the hell are we doing out there? Alright, where are we? We are over here. Alright, so first, and you probably would have wanted to have seen these lows get taken out first too, which they do. So this is a value. This is an entry right here. This is a real trade right here. Even if it didn't work out, it's everything we needed to see, and then the real move comes in. So boom, 5 minute market structure or 1 minute market structure shift within a 5 minute pullback. Then we take a 1-to-1 at the same that we're risking. Getting tight. And then we take our next partials, our next profits. It's the next big figure. So this 80 right here. So then if we were to go to the hundreds, or we would have went for, hundreds probably. Because the hundreds are like right around this high. Or we would have taken off at the high, or we would have aimed for the hundreds because we were already in the 80s, and it usually bounces from big figure to big figure. Is what I've started to realize. So either way, we wouldn't have made it to our profits. We would have been chopping up, and then unless you just took your profits like at this up close candle, because you knew that this was already a divided by 48. 137 plus 39, 60, 60, 70. Wait, what's 39 times 2, my dumbass? I really can't do little ass math problems. I'm not gonna lie to you. It doesn't mean I'm not gonna sit here and make more money than these motherfuckers saying I can't do math. Now this divided by so 30 is 60, then we gotta add them 2 5s, that motherfucker 70, that motherfucker 78. 176 divided by 78. So this is a 2.2 already. So like really, if you took off at that order block, like that up close candle right there, that's a 2.2 to 1. So it's like that's already good eats right there, yo. But let's say you would have took it off to the range, yo, trying to get a good move in. You would have got break even, and that's what it would have been, brother. It'd be like that. But that wasn't even the real move, yo. So you could have got a 2.2 to 1. But let's say we didn't, all right? Let's say we didn't, and then we got this 5-minute pull back to equilibrium. And then when we close over here, alright, so you really could have got a 2 to 1 out of that first move, but we're not back testing optimism in this motherfucker. We're back testing motherfucking. We like to keep it on the darker side just because we want to see how good a bad week looks. So we make sure we don't not add in losses. If you're back testing, if you would have took a move as a loss, you got to add that in there if it matched your edge. And if your edge keeps on presenting a bunch of moves that are losses, you either have something messed up about your edge, where you're taking your edge, or your edge is just phony baloney. So this is at the 80 level. Let's take the next one off at the hundreds level. Now we can take it off at this high right here. That's good money right there. Let's say you wanted to just take it off at a well-rounded level. Big figure right there. 700s. This would have been the trade I would have said was the likeliness one to play out that we would have caught. Now even that 2.2 over here though was clean. I mean honestly a 2 to 1 is fire, yo. I'm not even gonna lie to you. We had no clue that it was gonna want to come down and sweep Asia. So I mean it likely would have had to run even further. And this is the thing about this move is after it takes out Asia, yo, that is also for this whole 4-hour consolidation. Let's switch to the 4 real quick. Computer's starting to get glitchy, boy. We only got a couple more days in this motherfucker to do though. So from let's just go ahead and remove everything from this low up to this high. Now you gotta realize that this is sweeping a low in equilibrium, which this was that move that you really could have took that motherfucker up to here. But we would have already established an entry back here, and we would have just been sitting through all this consolidation for our swing. For as far as our short terms, yo, shit, I mean, if you knew that, bro, you could have shot that bitch up to the moon, yo. If you knew that that was that final sweep of liquidity, and actually, I'm pretty sure they said Trump isn't gonna be bombing anybody for like 2 weeks. And it was like the price was like right around here. So if they just said some shit like that, fundamentally, you could have known that that bitch was gonna explode. I don't pay attention to fundamentals, yo. That's too much for me to deal with right now. I'm getting my technicals. When I get to fundamental trading, yo, man, I'm gonna be a living, walking legend, bro. I'm gonna be. People are gonna be like, oh yeah, man, that dude is real. I'm gonna be like, I'm just tapped into the higher consciousness. You know what I'm saying? So. Put that screenshot over here, which means that we can do the math. So 351 plus 152, 503, and then that divided by basically 152, 300, 1304. That's a 1.6 to 1. Honestly, the ratio was better on the first one, but you would have got stopped out, and then you would have took the second one, and you would have been banging. But honestly, there was so much consolidation in that first move that it's like, man, you gotta know when you should just get out with the 2 to 1, because you could have caught both of these moves. Right now, I'm just backtesting if we would have caught one move a day, yo. Sometimes I had this rule where I could only take 2 trades a day, but 1 or 2 out of my trades that I took were counter trend trades, or one was in trend, the second one was counter trend. Only take in trend trades with the higher time frame, yo. Don't stop trading after you did 2 trades, because the next trade that came by, which was this day in particular, I tried to do a long, it didn't work, and then I tried to do a short, it didn't work, and then by the time that this long came in, I was already setting I'm done for the day. So, and then I was like, is it shorts too? I was confused, but yeah. Stick to the rules, man. This should be really easy, man. This should just be about as easy as waking up and walking, yo, just like to a pot, yo, for real. So I gotta get my wake ups right, yo. I'm worried about my sleep, yo. About alright, if I quit smoking weed, then how am I gonna go to sleep and wake up for the markets? I guess I'm about to just not get any fucking sleep, and then I'm about to be up early as fuck, yo. That's what it is. And I'm about to be taking a caffeine capsule until the move's over, and then I'm gonna crash the fuck out, and I'm gonna wake up until my sleep schedule's right. But keep it moving forward. Wednesday, April 8th. Alright, so April 8th. Sheesh. 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 So going into this day, we were big bullish, closed bullish over here, big bullish and everything, bullish on the daily, bullish on the 4 hour. But you got to keep in mind that we just took out these 4 hour highs, which, keep in mind, is actually a daily high, which, keep in mind, is actually a weekly high. So you got to know how important of a high that is. So this is a weekly high, so we're going to label it a weekly high. And then it's a weekly high that we're sweeping. It's the weekly high that came into equilibrium too. So this is a high that we just put in equilibrium. So regardless, you can look at it from just being a 4 hour high and the 4 hour sweeping it. The main thing that you got to pay attention to is we just took out higher time frame highs, and then 1 hour is higher time frame relatively, but comparatively, this is a breaker structure right here to the downside. So once we get that break, we know that we just are bearish now on the 1 hour. And look, we have all of this imbalance, all this void right here, this liquidity void, and this gap right here is what it ended up targeting. So once we pull back up into this up close candle right here, I was trying to take a long this day too. I was so confused. I was like, wait, we're sweeping 1 hour lows. Look, I was right here. I was like, we're sweeping 1 hour lows, and the 4 hours bullish. So nah, bro, we just took out a lot of liquidity over these highs. Then we broke to the downside, and this is simple break to the downside retest type vibes essentially. So then we come in here, we go to a 5 minute. All right, so what happens after we hit that order block, We're looking for shorts, right? Boom, 5 minute breaker structure. If you didn't catch the first one, look, it even offered another one. Look. So this is two A plus moves you could have caught, 5 minute breaks of structures. Both swept this bearish order block on the 1 hour. It's time to go to town as soon as you see that 1 minute breaker structure to the downside. You could take this one as the breaker structure. You could also do this 5 minute and then take this one down here for the breaker structure as well. This is the better entry, and this is the one I would have been patiently waiting for. Cause did any of these break the downside? No. This break. Now this is a swing low right here. So if you would have taken this, you would have got stopped out. I'm not gonna lie. Yeah, you would have took a loss right there. I'm not gonna lie to you, buddy. You would have took a loss right there, buddy. I'm not gonna lie. And we don't hide the truth around here. So we have to add that into, if we're risking two contracts, if we would have took on this 1 minute breaker structure, that would have been a negative 128. Notice how, well, for one, let's just go ahead and minus 128, because that's what it is. Cost to be a boss. And then on the second close, we wouldn't have got discouraged. We wouldn't have got pissed off. We would have been like, oh, the order flow's not working. Alright, so this first one, 240. plus 100, then that divided by 200, that's a 1.7 to 1. So 1.7 to 1, but we know that we just made this huge ass void, right? We just swept a 4-hour high, and then we broke the 1 hour, and we're coming off a bullish order block. So why not try to hold a little bit more, yo? Honestly, because look, you could at least hold this to equilibrium. Equilibrium of Asia at least. So a low in this range, which would have been just a little bit further, which would have been like right about here for a little bit more profits. And then you might as well just take it to the 80s at that point. Am I wrong or am I right? You're probably somewhat greedy. So let's just take it to that swing low right there, and that would have been it. Now that's like, man, like that's a super fire move right there, yo. That's just a little bit more, and really just, let's keep it real. I mean, that's a super fire move right there. That's a super fire move right there. 357 plus divided by 200. That's a 2.2 to. And then that's basically 457. Alright, so let's just say, and yeah, we could have took this down to the gap. We could have took this further. We really should just take it off at the range, but we could target this low here as well, because we could assume that it's going to come to the 80. It's a 1 hour order block, and that was such a retracement up into that 5-minute equilibrium. Yo, so that's good. We're gonna let them run a little bit sometimes. We can take off at the 88 knowing that that's a low in equilibrium of the range, yo. That's what our rules are. There's nothing bogus about that. Then we're gonna go to Thursday, and then boom, we gotta do Friday, and that's the last 2 weeks, yo. And we only perceived one loss out of the last 2 weeks. Yet I had this is hypothetical. This is how me should have been, yo. The real me was taking counter trend trades all week, bullshitting, yo. Literally acting retarded, yo. And that's why I literally, man, this is so stressful, man. I literally just have to make the right decisions. If it's aligned with the 4 hour, and if it's aligned with the 1 hour, why the fuck am I taking counter that, yo? It's crazy, because I don't believe in it myself. That's why I keep on doing this. I'm not autistic, by the way. I have a friend who's autistic. Sometimes I just start to catch his flow, because his flow is just a genuine flow, yo. Alright, so now we're coming off of a 4 hour order block right here, right? Boom. We just swept a 4 hour OT and this gap. The 1 hour clearly closed bullish as we close over this high. So we know going into New York that we could look for longs, yo. So by the time 7 o'clock session opens, what is this? We probably got to sweep right here, and then we probably got to move up to see if that was the real move. If not, it's going to be whatever this pullback was up to equilibrium, a high in equilibrium. This is a high in equilibrium. I would have maybe have expected it to come up here, but it doesn't. Regardless, that's way past what we'd probably be looking for. Alright, so this, oh yeah, this was the tricky day. Alright, so this day so all I saw was that we put in this down close and then we closed over it. So basically we had a sminny breaker structure right here, and then if we pull the range from EQ to right here, we got a 1 minute inverse at the bottom of this range. So I took a 1 minute inverse from here up into this PM. That's it right there. Then this second time it came back down after it swept this PM liquidity right here, all that was resting over that. Then it comes back to this whole 5 minute range. Now from when this first one broke structure, we never got to pull back to equilibrium. So that's what you always got to be open to, is look, did we pull back to equilibrium? No. Did we pull back to equilibrium? No. So even though we made this little equilibrium move, we made sense out of that, and then we swept here, when this comes back down here, it's coming back to this 5 minute equilibrium and it's sweeping liquidity in equilibrium. Yeah. So and I usually try to keep my yellow lines as sweeps and my blue lines as breaks of structures. Yeah. But so let's go into the 1 minute. Alright, would have had a stop loss right here. Would have had a TP right here. And then at a level, we would have took the next one off at the next session, which would have been the PM right here. And this was right aligned with the 80s. See, so we would have just took it off at the 80s right there. Boom, this was the move, yo, and this wasn't even the real move, but this is the move that we caught that day, that we interpreted, that was aligned with the higher time frame, yo. So 1, 5 plus 47, now 80, 90, 94 divided, so 172 divided by 94. So 1.8 to 1. And the real move, to keep it real with you, that I'm not about to journal right now into this calculation, even though I'm going to be open to seeing the markets as this is the real move right here. Hold up. So this is like another one of those moves. Really? You don't get a 5 minute break of structure again until this move right here, and then you don't get a pullback to equilibrium until this. So this is the actual clean move right here. 5 minute break structure, and then sweeps these lows, and then you can take this up here, the 1 minute inverse, and take that up to some big figure over here, so like probably 820. Boom, sweeps 820, starts consolidating around 820, and then drops. It doesn't just do that randomly because it was aiming for that 820 level. Sorry, I don't know if y'all know the one trader who would be like, I'm not here to talk shit about anybody, but I keep on talking in his voice. But like, he doesn't know what he's doing, and he keeps on teaching the markets, yo. I'm gonna sit here and I'm gonna tell you that I don't know what the fuck I'm doing, and I'm living off the fucking government, yo. I'm not gonna sit here and try to teach motherfuckers. I'm making this video just for myself and my journaling, yo. But I'm kind of spitting facts. I'm not gonna lie, like. So the first 1 minute market structure shift we get out of all of this chaos would have the first clean one we would have got would have been right here. And then we would have took profits. Then took this next one off at the next big figure. Boom, 800. And yeah, that's just fire flow right there, yo. That would have been the move we really want to catch. Or if we would have waited for this pullback to this equilibrium, we would have caught this 1 minute shift from here. Also would have been an exquisite, elegant delivery in action. Regardless, though, I actually caught this first move right here, so I'm not gonna try to. And I should be catching these moves too, honestly. But once you get the one and done, I mean, just stop. Even if it's pure luck, just stop. But yeah, I mean, that would have been a better move right there. And then so what is that? We got this is Thursday. Docked real quick. A little some. There's so much more profits on the table though. That's why I want to backtest one of these days. But let's just act like we skip these two fat ass moves, and then let's just see what it comes to still. Shouldn't be disappointed. Should be Friday. Alright, so we were bullish on the 4 hour. 1 hour we were still bullish going into this day. And we did close under this, which made me think we were bearish. But you gotta see how London is sweeping Asia. This nice candle closed like right here. You really don't officially know that this is bullish until this candle closes over this high slash, yeah, really over this high. So at 8 o'clock you officially know it's bullish. Here's the funny part about this move though, is that at 8 o'clock is when we officially known we were bullish. Now we get this 5-minute market structure shift, and we could have just took this as a long. Yo, I took this as a short right here, and I was like, because I saw this 5-minute break structure, then I saw this 5-minute break structure. Now, it doesn't reach equilibrium. But if you move the low from here to this one, that's breaking the rules just to make it make sense. But if we go down into a 1 minute, so what this did was, this first low didn't make it, then this came down and it swept this low internally. So I figured, well, this low got swept internally. On a 1 minute, we can pull it from this range, because see how this went up and then went down, but this one is the up move that actually closed over this. So I kind of broke my rules, and I kind of just said, actually, let's act like this is what the setup was. And then as soon as that inversed, I took a long, because I was just kind of in tune with what the flow was, but really I was in tune with luck as well. So really, this move I shouldn't have took, because it didn't come back to equilibrium. And there is enough moves that do every single thing that I needed to do as far as my mechanical rules that I need to see before I can enter a trade. So then I think I ended up taking this one up to like a high over here or something. Like I think this high right here, and that high right there also is the 800s. So yeah, that was a solid move. But that was kind of pure luck. And then comes back down, and the real move goes down. But I actually took this one, so I'm gonna document it. Get the stop losses and all that, adjust it. There's that many of them. I took this one. Alright. It's kind of false, but whatever. Whatever. Really not whatever. It's really, you shouldn't have took this move, even if it did end up working out. Big figure madness. Excuse me. Whoops. I was just thinking in my head, I'm about to get off camera. Alright, 180 divided by, I'm gonna get gross in here. It's 2.421. You know what I'm saying? And yeah, that would have been that. The real move though, the real pullback to equilibrium, was it's right here. This is where the real, after we saw 1 minute inverse here, if we would have stuck to our rules, then we would have actually caught the real move. The real move actually had some. Pull our stop losses up to here. Notice how the entry price is relatively about the same. As soon as we get a close over this, which has been boom, take profits right. Alright, and this is really what we should have been on. And then trying to take out this Asia. That Asia range. Was right over that Asia range, is that 820 level. I think this one barely misses the 820 level though. Yep. Let's just say we would have took out Asia. That's probably where we should have been aiming in first place anyways, but the first ratio was so good. Alright, we're just gonna know how to look at that. And then so for week 1, we're gonna add up all the other weeks along the way from here, for the last week that we just had. Minus 182. That did happen. So in a hypothetical world, which we could quantumly shift into, we would have made about 22 on the first week, and then about 14 on the second week. You see right here. And then we could just add that together for a grand total of About 37. Just type this in. 3,725. And my calculator, my thing just died. I'll just type it over here real quick so I can finish this video. Three 725. And yo, so all we gotta do is stick to our rules. When a trade presents itself, take it. Don't ever be scared. Don't ever FOMO. If you enter a position, there was enough data displayed for you to believe in that position, right? So if you enter, don't exit. And if you enter and it was not a high quality setup, then you're gonna take the punishment by taking the loss on it. But you're not gonna hesitate, get in and get out. If you get in, you're staying in. Alright, that is what it is, yo. And you're only taking setups that are in alignment with the 1 hour and the 4 hour. Now, if the 1 hour is in alignment with the 4 hour, go with the 4 hour. The 4 hour probably knows what it's saying. Now, if the 4 hour is sweeping liquidity on a higher time frame and it's technically bullish, it's not bullish if it just swept a weekly high and the 1 hour did a market structure shift bearish. That's the 4 hour saying that it's bearish. It doesn't have to close under a low. But just pay attention. The markets are always expressing what they're saying. It's a reflection of human psychology, nature, or whatever, dude. It's literally, it's an expression, man. That's what I've been saying. Been like, bro, the markets are expressive, bro. Like you gotta look at it like it's always expressing something. Like every 30 minutes, every hour, every like 1 minute, 5 minutes, yo. Every single candle on every different time frame is an interpretation, yo. For you, yo, you gotta interpret it, bro. If you don't interpret what the markets are expressing, then you don't have to make a move, yo. But don't overlook what the markets are expressing you and then do some stupid, you know what I'm saying? Some just gung-ho, just like, you know what I'm saying? At least react to, a true interpretation, get on there, see what it's saying. Don't be scared because you're going to do something regardless to lose money. You're going to do something extremely foolish over a series amount of time to just completely go to zero. So if you're gonna lose money doing stupid shit all the time, at least make money doing decent or high probability. Stay in the setup. If you're gonna enter, you're either gonna lose the money and you're only gonna take the setup if it's a high probability setup. If it's aligned with the 1 hour and the 4 hour. And that's it. You're gonna wake up every single day. You're gonna make sure that you take a shower. You're gonna make sure that you work out, go on a run, take a shower, do whatever you gotta do to get your head right. And then by 6:50, you would have already have done everything you needed to do. You're going to be right here, ready, knowing that you are fully capable. No man is more capable of you doing anything. Knowing that, yeah, this might seem like some woe, but God has a way bigger mission planned out for you. So even though this is like some like 1% shit, man, we are just getting started, yeah. Just know that. Alright, you got to make it happen. Higher time frame and patience. Breathe, come to now.